Welcome back, everybody. It is Tuesday night, and this is Vetted VA Live. We're starting a new rotation here. We go about 8 weeks at a time. We get together every week with a group of vetted pros, realtors, and mortgage professionals to, most importantly, answer all of your questions. If you're here, you're watching live, you have a question, anything mortgage or real estate related, would love to help you with that. So go ahead and throw that in the chat at any time. A lot of times we have a very structured conversation of a topic that we want to make sure we kind of cover A to Z and let you guys know. But tonight we're going to go through and really just pick the experts' brains here tonight. So we're going to go around the horn just as if you were having a beer in a bar and you happen to find out that the guy next to you is an expert realtor or mortgage professional that helps veterans. We're going to kind of go through and talk about maximizing your VA loan benefits and how to get the most out of that. So I'm joined by Randy Tickle out of Salina, Texas, Jason Rivera in San Diego, and Jessica Wells in Olympia, Washington. So we've covered multiple veteran hotspots there. So you guys are able to help a lot of veterans. We're going to go with ladies first tonight. Jessica, what are your thoughts when you hear getting the most out of your VA loan? If you come across a veteran there and they have some questions, where do you kind of start with telling them tips and tricks for getting the most out of their VA benefit?
When I start with, I think one of the things I hear that always bothers me is people like, I'm saving my VA benefit to use it for when I'm ready to move, when I'm done. And so I don't think people realize that you can use your loan more than once. So that's always a point that when I've talked to somebody who's never bought a house before, or they haven't used their VA loan before, I'm always like, well, why haven't you used it yet? Because they just think that it's something that has to be saved and set aside for them to use when they're ready to buy their forever house, and they don't want to waste it per se. And so it's always a topic that I talk to a lot of either active duty or veterans that just never used it when they were moving and PCSing because they didn't want to waste it, or they just have never even looked or been given the advice of how to use it in their past.
Well, when I hear something like that, almost any bad information, old wives' tale, anything that you hear, there's a grain of truth. It doesn't just come out of nowhere. So, Jason, when you hear that, people being told, and it's something that we all hear, I'm saving it. It's special. I'm going to keep it in a glass jar, and I'm not going to use it until the exact right time. What are some of the reasons why someone might think that, and why is that wrong?
Well, I think probably one of the number one reasons I hear that they're saving it, I mean, especially being in California, California, especially Southern California, it's one of those areas that people either love Southern California or they absolutely hate it. And, when you have a high price point, you get a lot of veterans here who BH is maybe not covering a mortgage payment. In some cases, may not even be covering rent. So if they have this rumor in their head where they're like, I can only use it one time, this is not the place I want to use it at. I'm thinking I'm going to save it for 20 years. And when I finally retire and want to move back home, I'm going to buy my dream home. A lot of people really have this idea, even those that can use it or realize they can use it more than once, have this idea that I shouldn't be buying a what I like to call a stepper home, kind of like that entry level home that'll get by, something that's comparable maybe to your apartment. And they have this idea that a home is like what my grandparents have, that established forever dream home. And so I think that's a lot of the mentality. And then from my standpoint, it's educating them like, hey, this isn't your forever home. This is your, 2, 3, 5-year home, depending on how long you're going to be here. I mean, sometimes veterans are stationed here for like 10 years, which is great. But either way, it's a short term in the big life of life. And it's all about getting started, because the idea of trying to save and then think you're going to be better off later on, it only gets more difficult, right? I mean, that's just life in general, right?
And that is usually the benefit, right? There's virtually no program out there that you can get in with as low of a monthly payment and as little cash out of pocket. Zero down, seller or the lender can cover almost everything. You're gonna get the best rate. You have no mortgage insurance. So for all those millions of reasons that we tell people, it is, if you are eligible, the best loan program out there. Randy, when you hear that and you think in terms of a lifetime, you and I are the old dogs here. We've done this forever. So you have clients that you've worked with for 15, 20, 25 years. So you have a veteran coming to you looking to buy their first home and saying, hey, I'm not sure if I want to use it. I want to save it. How would you advise them over a lifetime of potentially buying 2 to 3 homes, moving up as their family and life stages change? What's kind of the optimal way for a veteran to go through that?
Well, I always think of this story. I helped a guy not this last January, but the January before. I helped him buy his 4th concurrent home under the VA loan program. And he was a 20-year guy. I think he's 23 years or something now, but he had always been stationed at lower value as far as housing goes stations. And so he always bought around the 144 range. And he had now a rental property because he converted them after he left their PCS somewhere else. And so he has 4 properties, including the one he's living in now, and they're all on the VA loan. And the guy's going to be retiring in a couple of years. I think he's going for 25. And so when he does, he'll have 4 rental properties along with whatever retirement that he has, and then another civilian job. But he's done it right. He's used it. So he's lived in every house, 3 to 5 years. But then he converts them to rental when he leaves. So he's cracked the code. Obviously, it's difficult probably today to buy. It wasn't so much 20 years ago to buy a $144,000 house that was decent near a base, but still you could do a couple, unless you're in San Diego, I guess. But really cool stuff.
Even here, I mean, there's E5s, E3s, or definitely E4s that multifamily, getting into like a duplex, triplex, or quadplex, more on the duplex side, but depending on your rank and kind of where your financials are, a 3 or 4 unit, or ADUs here in Southern California are really big. So getting in, finding a single family that they can afford, and they just live in the ADU a lot of times and rent out the main home, or even some condos where I've seen single guys who rent out the other rooms to other, most of the time in, commands, if they're single, they're renting out rooms anyway, right? They're trying to maximize their BAH. So you get like 3 or 4 sailors. I work with a lot of sailors, so we're going to use sailors, but in a place, and it's like, hey, one of them's like, hey, you know what? Let's keep this group of guys, and we're just going to move into the place that I own and continue renting out the other 3 rooms and benefiting whoever that owner is. And the guys that are renting feel like they're doing well because they're still able to cash, pocket some of that BAH. So there's lots of options, even in a high price area.
And it's almost more necessary in a higher cost of living area. If you're somewhere, I mean, even middle America, flyover states, $220,000, a lot of places. I mean, there are still places where you can buy a house for $150,000, but a lot of middle America is 225. But at that point, with your VA benefit, a lot of people can do it themselves. But if you're in an area that's a $500,000, $600,000, $700,000, $1 million entry level area, so one of those cool benefits of the VA loan is we don't have the loan limit. You can do it. You can do it with 0 down, but you don't get to do it without having a pretty big payment. So I had a situation, same thing down in San Diego, and the guy bought it, and he had a 4-bedroom house, and he had 3 buddies in there. He eventually moved out, and he's got 4 buddies living in his old house, and they all have roommates, and he went and bought another house, and they more than pay. It's almost like when you look at Airbnb and VRBO, people will say, well, I can pay more for a house because I can generate this rent. Well, if you're renting rooms, you're going to make a heck of a lot more than just renting the whole house. So those are some excellent sort of house hacking ideas in the way, if you are in a more expensive area where you control a really expensive asset for a little amount of cash. Pros and cons to that, but historically you get nice appreciation over time. Randy, when you get someone coming to you and they're saying, hey, I'm a veteran, just got married, thinking about buying a home, what are some tips and tricks that you suggest for them to maximize their benefits?
I mean, obviously the first thing I always dive into is just medical ratings. A lot of people don't think about that, and that's one of the things when people get out that they kind of put off or whatever. I mean, I just did a benefit program for just basically a ratings stop or start group and with the local DFW and VFW, and we got 4 people there that were Vietnam era folks that had never got a medical rating. And so we got them all, like, that's happened like for the last year and a half. And almost every time we get Vietnam era or whatever, folks that have never used it, didn't understand it. And one of the guys that we did a year and a half ago, he's at 100% now. So just some benefit there for, the 10% rating, which is really pretty easy to get to, is going to take away your funding fee. And so that's really the first thing I cover with them. Have you ever done it? And most of them will say, never, just I need to, but I never have. And so there's a couple of ways to get that started pretty easily, as long as you're like, if you've ever been anywhere close to a firing range, etc. You can usually get a 10% rating from the tinnitus or tinnitus, however you want to say it. I push people to take care of those benefits and get them rolling, depending on the time frame. Obviously, if they come to me and they need to close something in 30 days, then we don't have the time. But you can still get the claim started and do the right. We've got to do the 8937 and get the right forms in place. And then they can get a refund later if you do it that way. But that's my first thing that I always ask is, do you have a rating? And if not, why not? And I've never really had anybody said, well, there's nothing wrong with me. It's like, it's always people that don't have a rating that said, well, I need to do that, but I haven't. So that's my big thing.
I've done a bunch of classes on base with active duty soldiers too. And that's one of the things that I tell them when I'm on base, like, hey, keep track records of all your medical stuff. Like, just keep everything going, go into the doctor, go into whatever every time you can, because that'll just build your case too. And people, it is a huge benefit when they end up with a disability rating for multiple reasons. But that's same advice I give people all the time, Randy. That's great.
And just to quantify it, this is an example I had here. It was early COVID. Gentleman, for whatever reason, 50 something years old, and never owned a home, made really good money. He worked here in Fountain Valley for Hyundai, VP level, makes really good money. Ends up buying, I think it was an $800,000 house. It's probably 1.2 million now with the way things have gone, but he paid a $16,000 funding fee on that. And then, of course, rates go even lower. He comes back and we do an IRL on that, and he's exempt. I'm like, what happened? He goes, well, you talked to me about it. I was too busy at work during COVID, didn't do it, went back and got, and I think it was tinnitus, and it was a 10% rating. But on that $800,000 IRL, saved him $4,000. It would have been much nicer to have that $16,000 back. But just so you guys know, it's real money. Even if you're at a $200,000 market, it's $4,000 on the front end. Randy, maybe talk about just on that topic. You're in Texas. Texas has the best benefit from that. What about the disability rating and getting some exemptions from property taxes? And Jason, once he's finished with that, maybe talk about California. And Jessica, if Washington has anything similar, we kind of go through what that looks like.
So the biggest thing in Texas is our Achilles heel as far as affordability is property tax. We don't have individual income taxes, but we have a very stout property tax. So if there's any way to get a break there, then I've absolutely pushed that. So our best benefit is to folks that are either 100% exempt or 100% disabled or rated as individually unemployable, either one of those two. So some folks are not 100%, but they're paid at 100% rate, and they're rated at 70, 80, 90%, but they're still paid at the 100% level. And so Texas allows them to have that 100% exemption, just like the totally no property taxes involved. And so that's a big thing. Other than that, it's still kind of weak sauce when you get below that, because Texas is going to give you up to $12,000 off the value of your property. And so that's not a $12,000 exemption from the tax bill itself. Ends up being a couple $100 a year, because you're like, if you had a $100,000 property, then they're going to tax it as if it were an $88,000 property. So it's not, if you're not at the highest level, it's still pretty painful property taxes, but but I really push people to do that, and then get involved with like DAV, or there's a number of people that that can help you get to that next level. The PACT Act helped a lot of people that I was dealing with this summer, this last summer, get that extra little bit that made it to the 100%, and it's a beautiful thing. So.
Jason, how does that contrast with what we have in California? It's not quite as good as making your property taxes disappear, but we've got a decent exemption for 100% disabled vets.
Just a real quick side note. There was Tyrone Taylor. I don't think the Facebook link went live, so I did try to post the YouTube one. I don't know if you can see it on your end, Josh, or not. But any case, going back to the original question for California's veteran disability. If you're 100% disabled, the property tax is, oh, perfect. You made it. The 100% property tax, or if you're 100% disabled, your exemption is, the basic exemption is 100,000. So, and then if you qualify for low income, it's 150,000 off. So if your property tax was, you bought the home at 500,000, they would look at it as if it was 400,000. And I believe it's not to exceed, I think it's 4,000 in the total amount that they will cut off. Does that sound about right?
Yeah, and any way you cut it, it's a significant amount. So if you have that,
like any savings is better than no savings.
Yeah, when you're looking, we're at 1.25% tax rate. Essentially, for most of California, could be a little lower, a little bit higher. $100,000 of property value disappearing is $1,250 a year, plus or minus. It's not bad at all. How does Washington handle that, Jessica? Any benefits for disabled vets?
Washington's not great as far as benefits go. They have an income cap on everything, and basically, if you are below the income cap, you don't qualify to buy a house. It's something like $42,000 a year or something like that is what they cap it at, and they include your disability income in that cap. So basically, if you have a disability income and you have a job, it doesn't qualify. So it's county by county, and it varies by county in Washington. So there are some counties that are a little bit more user friendly, I suppose you could say, but for the most part, we really need to catch up to some other states up here in Washington with our tax benefits.
It sounds crazy because there's more that goes into living just versus what's the cheapest and easiest. But if you had an interest in potentially living in Texas and you were a 100% disabled veteran, it's almost like a no-brainer because, Randy, like you said, the biggest downside to Texas is very high property tax rates. Poof, it's gone. And, if you're 100%, you probably have enough in disability income to cover a mortgage payment in most relatively nice parts of Texas. You're not going to go into, the high end suburbs of Dallas and Fort Worth, but most places you can buy a really nice house and cover it there. Jason, how about you? Any thoughts of what you like to start the conversation with in terms of making sure a veteran knows something that will help them to get the most out of their benefit?
I would say the conversation normally kind of goes around like, what are their goals? How I always like to ask, how long is their stint here in San Diego? Officers are typically only here for 2 years, enlisted or somewhere between 3 to 5 years. So I kind of want to know how long have they been in San Diego? How much longer are they going to reside in San Diego? Are they from California? People that are from California have a tendency to want to come back to California. And, because I want to know, what I don't want to see is a veteran purchase a home. They only have a year and a half left here. And then in a year and a half left, they spent, a large sum of money and they're like, all right, I want to sell. And I'm like, well, good luck. Like you're upside down, like the cost to sell your home.
But maybe explain
appreciation.
that. Go through the math real quick, Jason. Someone buying with zero down and then a year and a half later, what does that require? I mean, we're coming off of 3 or 4 really weird years where we had
Right.
6, 7, 8, 10% annual appreciation. So people got away with things that are not typical. What does that
Exactly.
normal math look like?
Well, I think a national average appreciation was like 3.2%. So that means that there are going to be some areas of the U.S. that is lower than that. California, not even specific to San Diego, normally doubled the national average. So it was around like 6.4%. During COVID, people were in 1 year of ownership were walking away with like $100,000 after fees and whatnot. but we're not there yet. We're way back to, I think at last I saw, I think California's appreciation is sitting around like 4% year over year at the moment. So after the cost of, your real estate agent, your listing agent, if you decide that you're going to pay, your buyer's agent, a cooperating agent, whatever you want to call it nowadays. And then, cost of the actual closing cost, you have to account for that. And when you purchase that home at zero down, you have no skin in the game. So, after only owning that for a year and a half, yes, you've put a little bit of equity into the home, but not a whole lot. At a 30-year loan, 1.5 years is not a whole lot of money in. So now you're really counting or banking on appreciation. And if appreciation is only 4%, and that's an average, depending on where you purchased at in the US or where you purchased at in San Diego, you might have only seen 2% in that short period of time. So what does that mean is that in that year and a half, you're likely going to have to pay more than what your home's worth to get rid of it. Or the alternative is looking at renting it. And in a place like San Diego, you're also going to still have a mortgage because your rent is not going to come close to what your mortgage is at, especially when you put zero down. So that's the conversation I want to have with them really up front, because I see this very often, that people come to me after owning a home for a very short period of time, like, hey, sell it for me. I'm like, ooh, like, didn't you ever have this conversation? Did you, so what are your goals? People that are from California, but maybe have a short time here, it might still be very beneficial for them to get started, because this is a very hard place to get started in. And if you're okay with being, paying a little bit out of pocket while renting your place, think of it like a TSP. You put a little bit of money in, your tenant's putting more money in. Hey, it can still be a win-win depending on your financial situation. But if you're like, hey, I just want to buy a home and then sell it, well, hold up. We need to have that conversation. We need to have, what are your goals? And then also follow suit with, what are you looking for in a home? Maybe you're wanting that single family home, but your finances and kind of what your goals are pointing towards is maybe it's here in, we call them townhomes / condos. That name's used the same here in California, where in other areas, townhomes are actually what we call PUDs here. So a little different in naming convention, but nonetheless, you guys get it.
So tell me this. I mean, along those lines, Jessica, you're also in an area with a large active duty population. Jason's in San Diego. You're there near Fort Lewis with all that fun stuff. How does that conversation, how is it different when you're talking to someone that's active duty who may not be in control of how long they're going to be in a location for one time? Because if I'm talking to a non-veteran, I want to talk to them and say, hey, are you stable in this area? Is your job likely to stay here? Is your relationship likely to keep you here? Can we have a 5 to 7 year time horizon so that we don't ever get on the wrong side of it? Veterans don't always have that luxury.
Yeah, no, that's definitely a conversation. Just like Jason was talking about, I talked about what's their goals. Like, do you want to buy this house and keep it when you have to? Because they don't have control of when they're PCSing or when they're leaving. They don't even really get much of a warning of when they're leaving. So they always have to have the conversation of what if you're leaving, or do you know how long you're staying here? Because we're not in a real cheap market up here either. I mean, if you're approved for anything under 450,000, you're getting something very small on a postage stamp lot. So we're talking about price ranges, and then 580 is like an average single family house around here, around JBLM. So you've got to make sure, because if you try to sell it in a year and a half, you're in the same position where you're going to end up paying money into it. So are you prepared to be a landlord? Is that something you're even interested in doing in the future? I mean, we do have great BAH up here, so it covers most of their payment when they're here. But if they get stationed someplace else where they don't have that BAH, and the rents are pretty good around here. Our rents have kept up with where mortgages are at, where purchase prices are. So usually cash flowing on a rental isn't a big issue, but it's also a big undertaking. Do you want to be responsible for having a rental and dealing with being a landlord? Because that's a whole nother box of issues that people don't think about too, when you're just going to keep it as a rental.
Perfect. Randy, any other things that you like to go through with veterans in terms of maximizing the benefit when they're looking at buying?
I think a lot of times that one of the big things that comes into play with people moving, et cetera, is that there is the possibility of buying based on a job offer that isn't necessarily in place yet. So that gives you some latitude and flexibility, because there's a lot of lenders that will allow you to take a job offer where that you start the job no longer than 60 days after the closing. But you can use that income as long as it's not conditional, as long as it's W-2 full-time, not variable, and not conditioned on anything. You can use that income. So sometimes that makes people aware that they can qualify sooner or maybe for more, depending on what they're trying to do and what their goals are. So.
Perfect. Jason, what else do you like to go through with folks?
Well, after I've kind of established what their goals are, it's more just kind of narrowing, I mean, we're in a high priced area, so we tend to have kind of two types of buyers. You have established families, people that have already owned a home and are using the equity from that home to buy another home. They're moving here. Or you have more of the first time starters, and those are the ones that you have to just be strategic on. Kind of going back to like the multifamily, sometimes someone might be qualified for only, a bare minimum condo or townhome. But I'm like, hey, if you're okay with the idea of being a landlord and living in your place, we can look at buying a duplex. We can use the income off of that second unit to help you qualify for it. A lot of times that'll actually, I can take someone that's only qualified for like 600,000, which is definitely only a condo here. And we can look like at a duplex, and all of a sudden now our budget's like $1 million or 1.1, depending on what that rent is on that second unit. Or if it's, 3 units, it can bump it up a little bit more. And then it's just playing this game of like, all right, so we know that if these rents are here, this allows you to buy here. And so we can set up a strategic search, kind of going, all right, here's some areas, that you could afford. You can end up buying a duplex or triplex as a single guy, still rent out. Maybe if it's a 2-bedroom, 1-bath, maybe it's two 2 bedrooms, 1 bath. You can rent out one unit to a whole family, and then still rent out and house hack your other bedroom with another buddy. And all of a sudden you went from, hey, I was only going to be in maybe a 2-bedroom condo, to now I own a duplex, and my mortgage is a third of what it was going to be in that condo.
Well,
And that's the difference buying a duplex too, or multiplex, versus just renting out rooms to people, because you
Exactly.
can use that income on a duplex that you are allowed to rent out rooms in the future if you buy a single
Yeah.
family, but you don't get to use it for qualifying when you purchase it. So that's something that it's a house hack to go ahead and rent rooms out, but for qualifying and buying something different, you got to go with a multi-unit property to do that.
And it really, I feel like for those individuals, when it works, it allows them to really maximize their time here, especially for people just getting started. I mean, honestly, I look back, me and my wife talk about it, because we got married super young, wanted to buy back in 18, 19 years old. And, this is like 2002. Google's not the Google we know. And the only way to learn about the VA loan, there was no vetted VA. There was not even really a Google. It was through Fleet and Family Services on a Wednesday at 10 o'clock in the morning. And it's like, no one has time to go to Fleet and Family Services at 10 in the morning. It's a work day. And we had a real estate agent that said, oh, you guys are too young to buy. And we just kind of dropped it. We didn't revisit that idea for another 4 years. Like, so to think that you can be that person, you could be me at that age, and like, hey, you've been in the military for a little bit, you can buy a home in a place like San Diego. That's a huge benefit for something like
And
that.
Jason, for those that are too young to remember, what happened to real estate prices between 2002 and 2006 in San Diego?
Went up. I mean, went way up.
Way up.
Yeah,
Way
like
up. I mean,
I bought my first condo in 2007 when they were like, at the tip. Yeah. And then I watched those prices drop. and you know what? Even though I experienced that, and I was a homeowner during that, and I kept that home during that period of time, it was still the very best decision that we ever made, because we got started And yes, there was, some stressful moments for those that lived through that, but I was military. I didn't lose an income, still made my payments. And I had only planned to be in that home for 5 years and ended up being in it for 9 years. And yet it acted as a massive savings account. And I still walked away with more than, sold it for more than what I paid for it. And so I tell people that all the time because I'm like, oh, what if the market crashes? I'm like, well, it's pretty rare that that's going to happen again. But I can tell you, it's not about, are you playing stock markets? Are we playing penny stocks, or are you in it for the long run? Because if you're in it for the long run, if you don't own a home, it's all about getting started and just hanging on to it as long as you can.
There's a couple of things that we've kind of talked about. There are competing ideas that you have to balance out. Other things being equal, it's almost like investing or starting a 401k. The earlier you can become a home buyer, the better off. But at the same time, most of us, when we were 19 or 20 years old, first of all, we're unsettled, didn't know where we were going to be tomorrow, and we're knuckleheads. So probably not the best idea to take on a big thing like owning a home. But Jason, similar to you, I'm not a veteran, but in 96, 97, I still have my little business plan, my goals. When I first got into the mortgage business, like, I'm going to buy a 4-unit building. Here in Huntington Beach, there's a little area of town that is the not so nice part of town. And at that time, they're like $275,000 for a fourplex. Today, those same fourplexes are $2 million. So my plan was buy that, live in it. It's not the happiest place on earth. You're not going to love it. And then someday you'll find a girl, you'll go get married, and you'll go get a nice house, and we'll keep this. So it worked out fine. I have other real estate, but nothing would have been as good of an investment as having done that, of starting early and getting something that's more expensive that you can afford because other people are offsetting the payment. So again, you have to be ready. You have to have that long-term time horizon, but other things being equal, you want that to start as early as possible. If you buy when you're 25 and you get a 30-year mortgage, that house can be paid off when you're 55. If you buy when you're 40, you're looking at 70 before that 30-year mortgage is paid off. And there's never a right or wrong time. So no one should ever feel bad. Hey, I'm 40 and I don't own a house yet, or I can't buy a house. And I'm sure you guys get that question. I get it all the time. Oh, I'm 45. Is it too late? I'm going to be retired by the time I get it paid off. Like, no, we just have to have a plan. Exactly. With that, I would kind of love to kind of go around the horn and get you guys' thoughts on this. Different markets, but again, Jessica, Jason, you're in heavy active duty markets. So I would operate off the assumption that maybe sellers are a little bit more familiar with VA offers, or at least their professionals, their realtors are. We get a lot of pushback, or we get a lot of veterans will reach out. Yeah, I know I can go VA, but I'm thinking I need to go FHA to get it accepted, or maybe do a 3% down conventional. Randy, you're shaking your head. So in your market, how do you combat that? What does a VA eligible buyer need to know to not get on the wrong side of that and get pushed to suboptimal financing because there's some biases against the VA loan benefit out there?
Well, I mean, the biggest thing for me is just to understand and really believe in the product, and then put a team together that is the same criteria, that truly understands the VA loan and the benefits that are inherent in it, and not just your mortgage guy or girl, but your realtor as well. It's just such a big difference. And little things like, I try to talk to every listing agent on every one of my buyers' prospective contracts, because I get an opportunity at that point to talk to that agent, to find out what their biases are, and spend some time with them to help overcome those. It's a big thing, but I have to have a buyer's agent that has the same passion and knowledge as well to come out, because most of the people that I know that don't use the VA loan and use FHA, etc., it didn't come from a place of knowledge. It came from a place of ignorance, and not theirs necessarily, but the partners that they worked with. So it's the old little hashtag, who you work with matters. It's such a huge thing to take that belief and understand the benefits of the product. It's the only product that is zeroed down, for the most part. I mean, there's the USDA, but that thing is a unicorn. And then there's the only set of guidelines that actually say in the guidelines instruct the underwriter to find a way to make the deal work. Most every other product, your underwriter's job is to find a way not to make it work, and then your originator has to overcome it. But in our world, as long as we lay it out properly, and not that everybody is has issues or whatever, but if there are issues, the product is there with an underwriting bias towards making the loan happen. So it's just such a tragedy when people went into a product, because the VA loan, yeah, it has a funding fee if you don't have that 10%, but there's no MI, right? So the FHA, not only does it have at least a 3.5% down, it also has an MI every month. So, but between the two of those, the rate's going to be similar, but you add the MI into it, so your effective rate is not as good. And then the 3.5% down that you're required to put, obviously there's a big difference in that. And then just with the guidelines. So it's an ignorant thing that the real estate community as a whole does when they allow a veteran that's got hard-earned benefit to not be utilized. And I hate it.
And maybe, a strategy. I had this happen here recently. We had a buyer who was FHA was the optimal solution for them. And we get the pre-approval over to the agent, and they said, hey, they're looking at a couple properties I don't think will qualify FHA. Can we go conventional? Again, I thought they didn't quite understand there, but I said, let's do this. Let me run it. Yes, we can get them conventionally approved, but on each of those offers, can you write it however you feel like you need to write it, but get in that contract our buyer the right to choose whichever is best for them, as long as it doesn't slow down the transaction or give us a problem. And in some instances, we can do the same thing with VA. If you have an agent that someone really wants to work with, and they're insisting that, hey, we're going to have a problem, how about if we get a conventional approval, an FHA approval, and you have both? And I assure you, we're not going to have any problems with VA that we wouldn't have with the other loan types. But at least if it makes you or the sellers feel better, it's there as a backup, just in case we have to do it. So that was a thought that I had while you were going through that, Randy.
That's a great thought process. And one other thing that the difference between the FHA and the VA is the loan cap. So the FHA cap is always considerably lower than obviously a VA. Whatever you qualify for, you can go. We've talked about this before. $4 million is like the most that I know of that someone's done on a VA loan with zero down. Try doing that any other loan product.
It's insanity.
Yeah.
It's a little crazy, but it's great. It's an awesome benefit of the program. Here again, kind of talking about the different things, and we haven't gone into this nuance. What I would say, a piece of advice that I would have for a veteran buyer, is know the power of the VA appraisal process, because this is one of the most crazy biases out there. The people, oh, VA appraisals are really tough, and you're like, are you people dumb? Like, you talk about ignorance. You could not be more wrong about something. It is the most flexible, best appraisal process out there. Rylan Maddox, who's been on the show many times, he had a Facebook post that one of a client that he's going to end up getting the loan for, they were working with the big giant 800-pound gorilla of VA loans, and the appraisal came in low, and basically the loan officer said, yeah, you're screwed. Nothing you can do. No hope. And you're like, are you kidding? So, first of all, we have the Tidewater. They don't get to just drop a bad appraisal or low appraisal on you. They have to tell you, hey, I'm not seeing it. So we get to collaborate on trying to find a solution instead of butt heads over, hey, dumb appraiser, you're wrong. Most times that will solve the problem. Doesn't solve it at all times. So if we still have a problem, we still can go to the reconsideration of value. That appraiser is now taken out of the equation, and VA staff appraisers look at it and they hear from the veteran and could decide, is this doable? And we all have stories. All of us that do loans, all of us that sell to veterans, all have really amazing stories of appraisals that were able to be overcome with a VA loan that there's no other loan that we would have got around it. So I would say that would be probably my biggest piece of advice. Just make sure that you're working with a lender and a realtor that understand that, because it's cool that they understand it, but they have to be able to convey that to the seller and the seller's agent and representation so that everyone knows this is literally the best option that we have out there.
And one of the thing, we had a post the other day about one of our vetted VA folks was asking, what kind of questions do I ask the realtors? And I forget who gave the advice, but they said, ask them about the Tidewater and ROV and see what they can explain to you about it. And I think that's brilliant. If your realtor can't explain the Tidewater and the reconsideration evaluation process, then you need to keep shopping for a different realtor, or send them to us so we can educate them. One of the two.
And it's not a matter of being a jerk and trying to have a gotcha. Hey, I know more than you do, or you're dumb. It's a matter of there are questions that reveal the depth of knowledge that someone has. And it doesn't mean they're dumb, but it could mean they're ignorant and
Right.
just don't know the program. There's realtors out there that are amazing realtors and have terrible misconceptions and biases against the VA loan program. So it's important. It's another layer above and beyond. First of all, you got to get along with this person. You're going to spend a lot of time with them, work very closely with them. You have to believe in their abilities and knowledge, but they have to have specific VA knowledge to truly be able to help you.
Yeah, it reminded me of that movie, and I'm trying to remember the name of the movie where the lady was the testimony character witness or whatever about I'm gonna have to remember this, but basically they said, was it a specific year of car that made these tire tracks, and she went off into exactly why it couldn't be that year, etc. That's kind of just one of those things that you ask that question and you get the right answer. There's no way. That's an expert.
Yeah, there's no way to fake your way through that. I mean, I guess you could, because if the veteran doesn't know what the right answer is, you could buffalo your way, but not. Jason, Jessica, in more heavily active duty markets, is there any less of that bias against VA? Or are agents any more familiar with the program, or do you feel like it's pretty much the same everywhere, that there's misinformation and biases against it?
I think in San Diego, we don't see it a whole lot, especially with a lot of the traditional like single families that are being sold. You do see it a little bit on the investment side, because a lot of the investment real estate agents don't see a lot of VA loans. So when you have like someone that's might be looking at like a multifamily, a lot of times we'll have those agents kind of, I don't think this will go VA, or, kind of a little bit of a him and haw. But in any case, I think it kind of goes back to what you both said, and I'm sure Jessica would agree with that, is having a team. It's not just your mortgage professional that knows the VA. I know there was a question at one time. It was like in like one of those real estate groups where it was like, oh, real estate agents don't need to know about loans. And then this is exactly why they do need to know about like at least the VA loan, because you do get this kickback. And yes, you could say, oh, my mortgage professional, my lender, loan officer, whatever can answer that. But your real estate agents, that first line of communication. So when they're submitting the offer, or before they even submit the offer, and they call the listing agent to get details and kind of feel out the situation, try to figure out what some pre-negotiations, if you will. And if they're already up front going like, I don't know about this VA loan, all right, now it's time to educate. It's time to hit them with the like, hey, this is why this loan's not only going to be the best, but it's going to beat out everyone else that's going to submit the loan. And then because you built that phenomenal VA team, you're going to call up Randy or Jessica, and they're going to, back that client and say, oh yeah, Josh is phenomenally qualified. He's, blah, blah, blah. And this is why the VA loan is so much better. So not only did you hit them initially with it, you have your backup, your mortgage professional also we get it. So now they're hearing it from two people, changing that perception that, hey, like this loan's not that great, or, whatever there's so many different misconceptions, with it. I just feel like having that strong team really solidifies that the loan is good. And that is why it's important to find, I think in some areas of the country, it might be hard to find a real estate agent that's strong in the VA loan. But as Randy said, point them towards vetted VA. We have no problem helping them and guiding them to being successful in helping you.
And honestly, I think we all have stories of even in the craziest, tightest COVID market when entry-level homes were getting 20, 25, 30 offers. I didn't never had a veteran that had to throw in the towel and didn't get a house. They needed to work with a very persistent realtor who was going to advocate on their behalf. In many of those situations, either they bought the home from a veteran, they bought the home from the child of a veteran, said, my uncle or my dad or whoever was in the Navy also, I would love to see you have this house. People sell for different reasons. So you just, in a really difficult, tight market or a very desirable home, there are people who just aren't going to see it our way. But if you have the right people advocating on your behalf and being persistent and insistent that they're going to get what the seller wants, which is a closed transaction at the agreed upon price with no stress and no headaches, the VA loan is just a great option for that. So we're sitting here in about 45 minutes. We like to keep these to an hour or so. So kind of what we would love to do is just go around the horn and give each of you sort of the last say on getting the most out of your VA loan. And I'll kind of go first. The last tip that I have for veterans is ask a ton of questions. Do not be ashamed. Do not be embarrassed. Don't say, I'm sorry if this is dumb. Very few people, I'm sure there are people who buy enough houses that they become experts without being a realtor or a mortgage professional. But for the most part, if you do this every 5 years, 7 years, 10 years, you're never going to become an expert on it. I had a wife of a veteran call in last week. He's super busy, couldn't go through it. And they had some unique stuff. And she was awesome that like a normal call might be 20, 30 minutes. We were on the phone for like an hour, but she had really good questions. And we came to some unique solutions. One of them of her not being on the loan because her credit is not quite as good as her husband's. She makes good money. We don't need it. Her husband, thanks to the flexibility of VA debt to income, we went through it and we're like, well, which debts are in his name? What's his income? Okay, cool. Let's use his credit score of 800 instead of your 620, where you're going to pay a little bit of a premium interest rate. And when we're done, she just said, I just thank you for explaining all this. And say that if you ever get the feeling from a real estate professional or a mortgage person that they're inconvenienced or they're put off by answering your questions, that is a red flag to just move away, because you're never going to be an expert on this. We are paid. We make our living knowing this stuff and sharing it with you, and never have an expectation of you knowing anything about the process, especially when we're talking, many realtors don't know the VA loan program. So how is a buyer going to know it? You just don't. You may have a general overview. Hey, I can do 0 down. There's some kind of funding fee. I get a decent rate. There's no mortgage insurance. There are a million details in between the lines that if you don't step up and ask the questions and fully explain your situation, your thoughts, your end goal, then your professionals can't get you there. So don't be timid or quiet, and don't work with people that don't want to hear those questions, because that's the way you're going to educate and empower yourself to make the best decisions for you and your family. Randy, I'm going to give you next shot.
All right. So the big thing for me is that along the lines of what you just said is that I want to make sure that I understand fully what I say, like both the 30,000 foot view and the 1 inch view on exactly what the people want, what they need, what their goals are, what their time frame is, what their situation is. You really need to have, at least in my belief, a conversation up front where all those things, before you ever get to anything else, that all those things are discussed, and any potential roadblocks will come up in that conversation. Share everything. Don't ever not say something that may or may not be important. Let them know these are the things that I'm dealing with, or whatever. The originator is on your side. He's on your team, or she's on your team, and don't hold back things that you may feel a little uncomfortable about. Quite often, you're going to get more comfort by telling them that, so that you're not even worried about it anymore, and get that out. And so the big thing about me is I want to have that up front, that conversation, that it's at least like a 45-minute conversation, that we cover all that stuff. And then we'll do the application, and then we'll have another conversation after the application with all the documents to make sure, because people don't know how much money they make. They think they do, but like active duty, people think they are only making their salary, but you have the other things that you can use to qualify with, etc. People don't really understand their credit. They don't, that's another thing that, we have the conversation to cover those things after the application's done. And they don't understand their buying power necessarily. That's obviously our job to communicate with them, but it's all about, in the end, a relationship, and in my case, also being available to answer any question that you might have. There's no stupid questions. So that's my big thing, is to really fully understand what you're doing, and then help navigate that scenario into success. And sometimes it's not a today thing where that we're going to buy a house today. If the situation's really rough, it may be that we put a plan together to get you where you need to be in order to buy. Like I just helped a guy the other day, and I started with him 4 years ago. And there was a couple of things that they had in the middle that were rough, that they had to get through. And so they were off, that was on hold for a bit, but then we got back to the plan. So have that relationship. It really matters who you're working with.
Perfect. Jessica, final pearls of wisdom, insights, and advice for our veteran buyers.
Yeah, just kind of piggybacking off of you guys. My biggest piece of advice for people is get a second opinion. Just because you went to one lender and they told you one thing, or one interest rate, or one purchase price, whatever, the VA sets guidelines and lenders do overlays. So that person may only work for one bank. They may have one set of rules. Get a second opinion on pretty much everything. Interview multiple people, ask questions to all of those people, and make sure, because like you said, these are people that you're working with regularly. Your agent, your loan officer, they're all people that you're going to be talking to. And if they're not able to answer your questions, they don't communicate the same way you do. Like, be upfront with them and be like, I prefer you call me, or you email me, or you text me. Like, set your expectations and make sure that they're explaining their whole process to you also. Like, that way they know, like, are you expecting to close this in 3 weeks and they're expecting it's going to take 6 weeks, or vice versa. Like, make sure you're just throwing it all out there. The more information you give that person, and just because you get one no doesn't mean that that's really a no. There are other lenders that have other less restrictive rules on the VA loan, really, because the VA is they want you. The guidelines literally want the underwriters to work to get this home for you. So if you're getting told no, then get a second opinion, and maybe it's not a no, maybe it's a no right now, or maybe it's not a no at all. So just definitely always get a second opinion, and definitely interview more than just your uncle's favorite real estate agent. Just because everybody in your family has used them doesn't mean that they know the VA loan. They might be really great with your uncle's investment portfolio, but he's not buying he's not helping to purchase VA homes right now. So it's crucial to make sure that you have a good team working for you.
Absolutely. Jason, final thoughts?
I'm only going to echo kind of what everyone else has said, but definitely hire a professional as far as your mortgage professional and your real estate. Don't be afraid to talk to more than one. There's so many people that go through a transaction because of what Jessica just said. It was my neighbor, it was my cousin, blah, blah, blah. The thing is like, the real estate industry, there's tens of thousands of licensed real estate agents in every area. But only a fraction of those actually do deals on a regular basis. And even a smaller percentage of those are actually knowledgeable and work with like veterans. So you're going to, especially depending on where you're located at, you may have to talk to several people to find someone that can help you at the level that you deserve to be helped at. Don't get discouraged because you talk to 3 people and you're just like, man, they're all the same. Like, what it comes down to is when you pick that real estate agent and that mortgage professional, they're your team, they're your confidant, your fiduciary. You need to be able to feel comfortable with what they're saying. It's okay, to trust, but as Jessica said, verify it. Ask questions. Come in Vetted VA and go, hey, like, does this sound right? You know, as vetted VA, trust but verify. You know, you ultimately though, you need to trust them. These people are going to be helping you purchase or sell your most expensive asset. So if you're over here going like, man, I don't trust my agent, like I'm questioning everything, like they're probably not the best person for you. Ask questions. Hopefully your professional is willing to answer those questions. Hopefully they're willing to guide you through this. That's part of our job. We're here to handhold you through this transaction. Yes, you're going to be stressed at different periods of time. Ultimately, you will come out of that thinking, wow, that was easier than what I thought it was going to be. And I think the last thing was kind of what Josh had touched on. I think it was Josh, but just the goals. I feel like goals are such a huge thing because a lot of times when you're in the mood of buying a home, you're not thinking about like what's going to happen in 2 years, you know. So it's important that it's important that your professional hopefully will ask you those. And then you also tell them, you know, if you have a real estate agent, it's just like, hey, let's go see homes today, and doesn't ask you those questions. Well, you know, what happens when you make chief and you get orders in 6 months? So those are my parting comments.
Perfect. I appreciate it, guys. Appreciate you being here, sharing the knowledge and expertise. For those of you that watched it, hope you got some value from it. We will be back next Tuesday with another group of experts covering another topic of interest to anyone looking at buying or financing the real estate with their VA benefit. So again, thanks to the three of you. We look forward to seeing you guys next week.